How to lose $15 billion in just the span of a couple of weeks. Normally, the hedge funds and the venture capital funds are known for making a lot of money in a very small amount of time. But in the case of today, we're gonna study the case of Three Arrows Capital, which last week decided to lose $15 billion in only the span of around 2 or 3 weeks. It's a crazy story. I think it's very interesting because not only they lost $15 billion, they crashed the entire crypto market, which is an amazing thing. That was crazy time. So yeah, in today's video, we're gonna explain exactly what went on, like exactly step by step how they lost everything, why it happened, and we're gonna try to make an understanding of this huge story, which is going breaking news right now, to be honest. If you have any questions or if you like the video, most importantly, if you like the video, give a like to this video to recommend it to more people. If you want more videos like this, put it in the comments or subscribe, or both if you want. And if you have some questions that after the video that I didn't answer, you can write us in Instagram or you can leave a comment. That's up to you. And with that, let's go! Okay, so in the video of today, we're gonna follow this, this thread that Miles Deutscher make in Twitter. I have to say, and I don't want to sound stupid, but Twitter has a lot of good information for crypto, okay? It depends obviously on who do you follow. I always try to bring a couple of people who bring good alpha in Twitter, but for real, Twitter crypto is one of the best places to get to know people who knows a lot about crypto, but you have to follow specific people, and I like this type of people. Like Miles is one of the type of guys who brings very interesting alpha from time to time, and we're gonna follow a thread that he made talking about the full, everything that happened. So let's follow the thread, okay? Let's try to understand this story. So basically, we saw the biggest leverage resales in crypto history, okay? Basically, what did we have? We have a venture capital fund, which is called Three Arrows Capital, who got swiped out the earth. Literally, they lost everything, okay? This venture capital fund, as his name says, is a venture capital. What does it mean? It means that it's a fund that invests in projects, normally very early. I'm sorry, but their website is so shit. Like, it's even Versailles Hathaway website, which is terrible, looks better than this. But anyways, the website is terrible. The point is they invest in a lot of projects very early. I mean, they invest in Ethereum when it went out. I'm talking about 2016. They invest in Solana. They invest in Terra. We'll talk about that. They invest in Polkadot, in a lot of different applications before they went out. Basically, they give money to the project and they get some tokens in exchange, but they cannot sell those tokens until some time goes by. Basically, every month they get like a percentage of the tokens, and they cannot just go and sell the token. They are not just buying and selling crypto, they are investing in projects and keeping them for long term. That's how venture capital works. You get a lot of startups, and if one of them hits a 10x return, then you make money. Basically, they were super popular, okay, because as I said, they were top 3 in assets under management. They had almost 15 billion under management is what is known, because it's not actually public, but around that. And they invested in huge projects. I'm talking, they invested in Ethereum, not in Bitcoin. They just had Bitcoin. They invested in Avalanche, they invested in Near, in Polkadot, in Solana, in Terra, in Orca, in Aave, like in a lot of huge projects, even in BlockFi, in Deribit, okay? This is platforms that are huge right now, and they were in all of them, okay? So they invested almost everything, even in goddamn Axie Infinity, like they were everywhere, okay? So the first point that Miles explains here is, well, who is Three Arrows Capital, okay? Who's the owners of this venture capital fund? So, as I say, it's a venture capital fund, and they have two bosses, which is basically Kyle Davis, which is just an American guy, and Thu Su. Thu Su was the most famous one, okay? Why Thu Su was so famous? Well, because he has a Twitter account actually with 500,000 followers, which is a lot, okay? It's a lot. And this guy was very famous for using what is called psychops, I think it's pronounced like that. Basically, he would like literally tweet FAT to make prices go down and then buy it, okay? Like there's a case like in November of this year, he was talking terrible about Ethereum for like 5 days or like a couple of days to make the price go down, because as I said, he has a huge account. It's not that difficult to move crypto markets. They are full of manipulation. And he started talking so bad about Ethereum, and the next day he was buying 500 million of Ethereum. So this type of people, okay? Not like an angel of God, okay, or something like that. So these two guys basically created this fund, okay? And as they say, they invested in a lot of small projects when they started, like Avalanche, Near, Ethereum, a lot of them, okay? Unfortunately, last week, basically, they have a very poor risk management and they got wrecked. They lost everything, okay? So we're gonna start from the beginning. What happened? Basically, a week ago, it was weird because Thu Su, this guy, the leader, the more famous one, the other is not that famous, deleted his Instagram account and he went silent. As I said, it's super weird. This guy is always tweeting about it. He's always saying what he's doing and things like that. He just stopped tweeting at all. He was too quiet, like just too quiet for how he normally is, okay? And that started to generate some rumors about what is going on, because in this time, as we said in the last video, you can check it here, it's when we talked about Celsius, okay? Celsius was illiquid in this time, and they were starting to talk about a margin call on 3 Arrows Capital, but it was just rumors, okay? Shortly after, this guy meets the fool, basically find out that 3 Arrows Capital had a position of $245 million on Ethereum deposited on lending platform Aave. Basically, they had deposited on Aave, and they were borrowing against it $189 million. Basically, they were using leverage. They were putting their Ethereum as collateral, so they could take some dollars that they were converting into Ethereum again. So they were basically leverage, which is pretty bad actually. This put their loan to value ratio at 77. Basically, if the value of Ethereum would go down to, I think, 1034, which it did, they would get liquidated, okay? So this was found out because Aave is an open protocol. You can see the lineage, you can see literally everything is going on, and they found out that the wallet who was having this was related to 3 Arrows Capital. And when they found out, they said like, what the hell is going here? Because if Ethereum went down to 1000, which by the way it did, I mean you can see in the last days, well, this is Celsius, which is another thing, but if we find the price of Ethereum, we can find that during this period, we'll see it later, it dipped under I think it was 898 the minimum. Yeah, it definitely dipped, okay? So they got liquidated, okay? You can already know that. So basically, the problem they had is that when you get these type of positions, okay, with leverage, you have a problem if prices go down. Because if Ethereum goes down, you need to put more collateral, you need to put more Ethereum so they don't close your position. What is the problem? They cannot do that. Why they cannot do that? Because they don't have liquidity. What does it mean? It means that these guys, for example, they have a lot of money, of course, because they had 15 billion assets under management, and they had a lot of tokens that they got from Aave, from Ethereum, from Polkadot, whatever. But as I said, they are illiquid assets. What does it mean? It means that when you invest in a company on the beginning, you're going to be getting your tokens every month, which means they don't have liquidity. Every month they get a little bit of tokens of Ethereum, a little bit of tokens or Near, a little bit of tokens or Polkadot, but it doesn't mean that they have all of them. For example, Near, I think their protocol, it's launching the tokens like in total in 2 years. So they probably have like 25% of the whole investment, which means they have a lot of money, but they cannot move it. It's not actual money, it's not liquid because they cannot exchange it. That's the problem that they were having, because they had this position, not only this one, they had a lot of them, and they couldn't top them up. They couldn't put enough money. So basically, people started to be scared because they saw that they were using leverage in a very irresponsible way. I mean, that's not responsible. That's not the way you're supposed to use leverage, especially when you're a venture capital. You are supposed to invest in projects. You're not supposed to do these kind of DeFi weird things, okay? And the problem is, once you get liquidated, if that position gets liquidated, then price is going to drop down because it's a huge position, and then another positions are going to get liquidated, and then we had another position getting liquidated from other people, and at the end you get what is called a cascade, which is basically what happened. Okay, like from here, when Ethereum was on like 1,700 to 900, it went down 1,000 in one day. This is a cascade of liquidations because everyone was getting liquidated left, right, middle, like everywhere. Okay, we saw it in the video of Celsius. It was just crazy. Okay, and this is actually related to the thing that happened with Celsius. So the things started to get worse. It was revealed that 3 Arrows Capital was basically leverage loan everywhere. It means they were getting credit, they were getting money that they didn't have, and they were investing it with leverage, so they could basically get liquidated. That's literally what happened. And they were getting a lot of margin calls. Like, they closed them so many positions, and people didn't realize on the beginning because they didn't realize that that was 3 Arrows Capital, but they were getting liquidated everywhere. Do you remember in the video of Celsius we talked about how Celsius was selling its staked Ethereum? Remember about the depeg between Ethereum and StEth? Well, they were not the only ones. Okay, for those that don't remember, basically Ethereum can be staked to get some percentage earnings a year for when Ethereum 2.0 goes out, and when you stake it, you get StEth, because if you stake it, you can actually not unstake it. Okay, so that staked Ethereum, you can then put it to Aave and borrow against it and get more Ethereum and basically do the same thing. So they are doing the same thing. They are doing what is called looping, which is the same thing. It's basically putting collateral, getting a loan, and with that loan investing again, which is just a terrible idea, okay? Because it's a terrible idea because if StEth depegs from Ethereum, which happened, they are going to lose a lot of money and they are in a very risky position. So what does it mean? They started selling, but they started selling like crazy. Remember when we were talking about Celsius, nobody realized, but look at Celsius. Celsius were selling here, they had all their wallets selling, but the guys who were selling the most was 3 Arrow Capitals, 39,000 Ethereum, 20,000 Ethereum, 11,000 Ethereum, 10,000 Ethereum. We're talking, they were literally the ones dumping. The ones dumping StEth Ethereum, StEth Ethereum. It was not Celsius, I mean, also Celsius, but the one who really was dumping it was 3 Arrows Capital. They needed the cash now. They need that liquidity to call those positions, to top up their balances, to not get liquidated. Spoiler, they did, they got liquidated. So what happened? Finally, on the 15th of June, I know it happened some time ago, but I was waiting for some news. Finally, Susu confirmed that the market was right and that they lost everything. Basically, he said, we're in the process of communicating with relevant parties and fully committed to working this out. Basically, translated to English, we lost a lot of money and we are F. We're F. So why this happened? Why they lost so much money if they were a venture capital that was top 3, that was so popular, that was so good? Well, their biggest like hitter, the place where they lost the most money was Luna, was Terra Luna. Luna is what started everything about this market going down when it exploded, because there was a lot of very big institutions going long in Luna. Celsius, as we said, and 3 Arrows Capital, they got destroyed, okay? We are talking, they bought $500 million of Luna locked just before this happened. We're talking like, I'm pretty sure like 1 month before Luna exploded, they bought $560 million of Luna staked. Stake means they cannot move it. Again, illiquid tokens. They love the project and they invest in the project. Well, that position now is worth $600. $600 from 560 million. Like, not even Wall Street Best lost so much money. Like, that was very, very, very bad timing. But it's not the only thing they lost, because it seems that they were building a 9 figures position. We are talking more than $1 billion in UST in Anchor Protocol. As you know, when Luna collapsed, Anchor Protocol depegged, so that UST is not worth $1 now, and they lost all of it, more than $1 billion. So if we put this at least $1 billion plus the $5 million that they put in Luna, we're talking $1.5 billion wipe off in a week. Like, they lost everything, okay? They didn't thought about, I don't know, hedging or something. They literally lost everything and they couldn't get the money back because it's not their money. You need to understand, venture capitals is not their own money. They are raising money from investors and they are putting it in some projects. In the case of this position that they had in Luna, they had borrowed money from multiple funds and counterparties to put it into Anchor. So basically they lost money that it was not theirs and they couldn't pay it back, okay? We are starting with the loans. Basically, they are like the guy in loans all the time, okay? So basically, what happened, they lost that money and they started using leverage, okay? As we saw, they were using positions like the one we found here of Ethereum, and they were going leverage long, which means they were using leverage to increase their position size, get more risk. They can get, obviously, they can lose more, but they can also win more. Because one of the things that was very known is that actually Susu was one of the believers in the super cycle. I know it sounds degenerate, it sounds like someone from Wall Street Bet is actually investing, but yeah, these guys had 15 billion under management. So what is this super cycle? Super cycle means that basically they thought that because Bitcoin and cryptocurrency were getting like real adoption finally, they will get mainstream and they wouldn't go down like they did before. They would get down a little bit and then they would continue growing up because now they are finally adopted by the society. That's the theory of the super cycle, and they really believe that. But one thing is believe something, one thing is doing it without getting any protection. So basically they were chasing losses. What does it mean? It means that they were losing money because they were using leverage and they were betting more and they were losing more and they were betting more. Remember, this is a venture capital fund. They are supposed to invest in new projects. They're not supposed to gamble with the money of investors. These guys, their life is ended. I mean, like from a point of justice, the lawyers are going to come after them. They are already coming after them because you cannot do that with the money of investors, okay? Well, here he talks a little bit about general like poker and things like this, about how you may lose money if you keep playing like that. So what is the problem? The problem is that they borrowed money from everywhere. They borrow from FTX, from Celsius, from BlockFi, from Nexo, from BitMEX, from Deribit. Okay, Deribit had a position with them from I think 200 million. BlockFi lost money with them. BlockFi has been bailed out. They gave them money. Celsius also gave them money. Nexo gave them money. I don't know who else gave them money, but there's a lot of positions of like 500 million, 200 million. And for example, Deribit was owned in part by this venture capital. You have seen it in here. They had a lot of ownership. In BlockFi, the same. So they were taking loans without asking, basically. They were saying like, hey, give me money. I need to do things. That was destroyed. Like that's crazy. Okay, it's just crazy. And what is the problem? The problem is if you take 100K, I like this metaphor. If you take 100K from a lender and you cannot pay back, oh, you are effed. But if you take 100 million loan from a lender, then the lender is effed if you cannot pay back. And this is what happened, because basically they couldn't pay back, and now you have BlockFi, now you have Celsius, now you have Voyager. Voyager gave them 600 million. It's crazy. All of them gave them money, and now they are like, what the hell am I gonna do? I gave 600 million to this guy, now it's zero. Like it's zero. Like the glasses, zero. They lost everything, literally everything. So that's why the market collapsed last week. It was not only Celsius, obviously Celsius too, but it was everything. Everything was collapsing because these guys were literally owning money to everybody. Like 15 billion wiped out. Remember, in Luna, 45 billion were wiped out. In this last leverage cascade, liquidation cascade, I don't know how much leverage was liquidated, but that was more than 15 billion. That is crazy. The amount of money that they have lost is just crazy, okay? So what happened after that? Basically, BlockFi said, oh, no, we cover our part. And 2 days later, they were asking for a loan. They lost money. They lost a lot of money. And they are not the only ones, okay? They are just the ones who talked. Deribit lost money. Block Arrows, Block Arrows is a news portal. Everyone lost money, okay? All of them were losing money. And they had more problems. What problems did they have? Well, first of all, the problem that they had is that they were using some guys. I'm trying to find it. I don't find it now. But basically, there's another problem. For some guys, they were using their treasury. For example, in the projects, like in Aave or in Avalanche, they were saying like, hey, because you're a small project, because this is like the big project, but they were investing in a lot of small projects. I will run your treasury. Like I will keep your money running and I'll give you 30% per year. What is the problem? These guys took the money from those treasuries and also bet it on the casino. So basically, you have a gambling addict who is the owner of a venture capital fund, and he just getting money and gambling. It's like the Quadriga FX. I don't know if you know the story about Quadriga FX. It's a broker that went down in Canada. The guy was taking the money from the people and just like betting on the internet and lost everything. That's crazy. I mean, this guy, how could this guy have 15 billion under management? Right now, we had a new that this guy had a super judge that they bought with the money of the company to showcase to like investors to be like, oh yeah, let's meet in my super jet. They cannot even pay it, okay? But what is the real news? What will happen to them? Well, first of all these tokens are gonna be sold, okay? And they are gonna sell what is called their assets, okay? What they are saying is that they're gonna be selling assets. They're selling everything they have to pay their loans, and still they will have problems. Second problem we have, contagion. As I said, they affected Celsius, they affected BlockFi, they affected Nexus. Everyone got affected, and that's a big problem. So what happened with the market? Well, the market seems like finally it recovered from all these unleveraged. It's good to take out all these leverage positions because they are not good for the market. They are not healthy. But at the same time, some people is very hurt. And yes, some people got loans, but there's still people hurted and they are not saying it because you don't realize that, you don't find that until something happens. Every day there's a new company that got hit, there's a new company that lost money, everyone got hurt, and that's very bad for the ecosystem because there's a lot of people who is actually in not a good position, okay? But in general, this is what happened with 3 Arrow Capital. Obviously now we are in a much better position because they got liquidated, they lost everything. I have to say that I tried to find any news about them recently because that's what I've been waiting for some like final statement or something like that. They haven't. Basically, it seems like they have talked with lawyers. Let me try to find, yeah, they have appointed financial and legal investors to try to find a solution, which means basically they are going to trial. And these guys, I don't know if they will end up in jail, but they will definitely somehow have to pay for it because they were taking money from big investors and they are gonna want to take that money back. They have literally lost everything. They have been liquidated by everyone. Like you don't understand. Like here, I just saw a couple of them. They have been liquidated everywhere. Everywhere they got liquidated, which is crazy. So this was a crazy story of over leverage. I think it's very interesting because it's like watching a movie of Wall Street and seeing like, well, how these leverage work, how the financial market actually works. And I to be honest, I like the thread. I like it, and I wanted to share with you so you understand why the markets go down. Okay, market don't go down because some guy put a line and it says like, no, it's going down. No, there was a cascade liquidation, there was a market that was working, there's some guys that give money to other guys, and the big players is the ones who move the markets, and these big players are the ones who literally killed the market last week, or last month actually. Well, no, 1 week ago, like, I mean, it's just crazy. So it was a crazy story. I love the story, I hate the outcome of the story. I would be much happier if Ethereum was still in $1,800 because I would be mining double the money that I'm mining now, but thank you, Susu. And yeah, I hope you like the story. I think it's crazy, to be honest, but it gives us a good understanding of how the crypto markets work. If you like the story, please give it a like and subscribe if you want more videos like this. If you like the videos in general, you can put it in the comments. You can say, hey, Pedro, I like these videos. Make these videos. Don't make mine. Make this, make that. Whatever you want to say. And with that, we're going to finish the video. See you on the next episode. Goodbye.